Once again, a great session to start off with, given that when we walked into trade, you had supportive set of global cues. The Dow had clocked the 30,000 coveted mark for the first time ever in its history, as was the case with us as well when we clocked the historic peak of 13,000 in trade yesterday. So the SGX Nifty was pretty supportive. We had a bang on opening, 13,100, yet another record high for the Nifty, and soon after we began to fizzle out. Fizzle out we did, in fact, slipped a good 300 points from the top of the day to close in at the 12,850 mark, and that not just from the top but in itself as well is a good 200-point fall that the Nifty has seen today. But that's pretty much okay. You know, we've had pretty much a one-way move up. Yes, the FRI flows continue unabated. For all you know, today as well, you're going to have a buy figure and perhaps a sell figure only from the DIIs. So liquidity remains intact. That's going to be a very important figure to look out for, of course, tomorrow morning as well as we step into trade. And a bit of an ease off from the top is only par for the course. So nothing to get really alarmed about. The market momentum seems pretty much intact. In fact, experts say that we could cool off even further from the current levels of 12,850, which we've slid to. So what was really leading and dragging the markets lower? You'd have to say that it was pretty much across the board, while only the one segment which held out was PSUs, which I'll come to in just a bit. But first, a word on the laggards. Look at the way the Nifty Bank, which has been a great outperformer and has led the Nifty all the way up to even 13,100 earlier in the morning today. That was a big drag. It fell a good 1,000 points from the session highs. You had an Axis Bank which fell 3.5%. You had Kotak Bank which fell 2.5% as well. You had the entire private banking cluster which was taking a laggard. Also, what made news when the market was at its all-time top was HDFC Bank, because that's now managed to hit and join the coveted $8 trillion market cap club, along with the likes of Reliance Industries as well as TCS, which have already hit that mark earlier this year. So that said, banks were definitely one case in point which was under pressure. And again, within banks, something very intriguing was happening, because PSU banks for the first time were even attempting at a catch up. So while private banks were really getting clobbered, you had PSUs like a BOB, like a Punjab National Bank, like a Canara Bank, Indian Bank. They were all the ones which were actually holding up in trade. In fact, I would add even a GAIL and ONGC outside of the PSU banking names. These PSUs as well who held out very, very smartly in today's trading session. Some of the other losers included the likes of an Eicher Motors. Sun Pharma was a big drag. Asian Paints dragged quite a fair bit. Bharti was down about 2.5%. Shree Cement, Cipla, these were a couple of big boy laggards. And from within the liquid universe, which mind you, again, a great breadth to start off with, but completely reversed hands, well in favor of the declines. Idea fell by 5.5%. Jubilant Foods was down. SRF was down. Jindal Steel, DLF, they were all down. For tomorrow, of course, you will have the monthly expiry. It's going to be extremely critical. The market could get a little bit more choppy, and the FII figure tonight is something that we're going to keep our eyes closely on.